Welcome back to Investing Talk Podcast. Today we're tackling a question that lots of you have been asking. Is GameSquare Holdings a good time to buy now? We've pulled together insights from a pretty in-depth evaluation. It covers, fundamentals, technicals, valuation, recent news, all that stuff. Our aim here is really to break down this complex picture so you can figure out what it might mean for your own investment approach. And hey, if you find this discussion helpful, please do remember to subscribe, like, and comment. It genuinely helps us bring you more conversations like this. You could also maybe consider buying us a coffee to support the show. Also, really important, if there's a specific company you want us to look into, just leave a comment below after we wrap up on GameSquare Holdings.
Yeah, and what's fascinating, I think, about GameSquare Holdings is this mix. It's got this blend of high growth potential alongside some really significant inherent risks. It kind of reflects these broader, wilder trends we're seeing in, digital and crypto sectors right now. We're going to dig into exactly why the sources are painting this kind of picture.
Okay, let's unpack it then. GameSquare Holdings, what exactly is the business here, and how are the finances looking?
So GameSquare Holdings, they've positioned themselves as a vertically integrated digital media, entertainment, and technology company. Basically, think of them as focused on gaming and youth culture. They own things across the board: esports talent agencies, digital media outlets, marketing firms, creative studios. This gives them pretty diversified exposure in those, booming gaming and esports markets. Now, fundamentally, the sources point to a trailing 12-month revenue of about $99.58 million. But, and this is key, they also posted a net loss, a big one, approximately $48.65 million. And that translates to a negative EPS, earnings per share, of medical 1.49, which, clearly indicates they're not profitable right now. Quite the opposite.
Right, $1.49 loss per share, so
yeah,
definitely losing money. But they're in a high-growth area. How do you square that, the unprofitability versus the potential, especially for a company like this? What makes GameSquare stand out?
That's the crucial question, isn't it? In gaming and esports, fast growth often means burning cash initially. So that negative EPS, it's not necessarily game over, but, for an investor, it really highlights the burn rate. How long can they keep losing money before needing to show a clear path to profit? What seems to set them apart is, their aggressive push into both esports and, surprisingly, crypto. They're making these pretty unique moves into crypto treasury management, specifically with Ethereum or ETH. That could be a really distinct niche, maybe a big growth driver. Now, the sources didn't give exact debt levels or cash flow details, but they did just raise capital, which suggests they're actively managing their funds for these ventures. Also, there are no explicit future earnings projections, no forward PE ratios available. That usually hints at uncertainty, right? Or at least continued losses in the short term, which brings us back to that burn rate concern.
Okay, so unprofitable currently. Given that, how do we even start to value GameSquare? The usual metrics, like PE, just don't work.
Exactly. PE is useless here. The company has a relatively small market cap, just $70.55 million. But if you look at the price-to-sales ratio, the PS, that's market cap, divided by revenue, it's about 0.7 based on that roughly $100 million in revenue.
0.7 price to sales. That sounds incredibly low.
It sounds low, yeah. But the insight here isn't just, it might be undervalued. It's more that the market right now sees that $100 million in sales as having very little, if any, real profit-generating power behind it. So it makes it less like buying a cheap asset and more like, a high-stakes bet on them pulling off a major turnaround or on these new strategies really hitting it big.
A high-stakes bet. Okay. So low valuation on sales, no profit. Now, what are the analysts saying? Where do they see the price going?
Now this is where it gets really interesting for anyone watching the stock. Analysts actually show a strong buy consensus, and the average price target is around $3.67, which, from recent prices, represents a potential upside of 125%.
125% upside. Okay, that's significant.
And wait, there's more. Some forecasts are estimating an average price jumping to $10.76 in 2025. That's a projected upside of over 500% from where it is now.
500%, wow.
Yeah. Now, the sources didn't give us detailed DCF models or anything like that, but forecasts that aggressive, they certainly grab your attention. It suggests analysts are really banking on that future strategy working out.
Okay, so we've got the business fundamentals, the valuation picture, these huge analyst targets.
Yeah.
But what about the stock itself? What's the price action been like? What's it telling us?
The stock has shown some pretty significant recent upward momentum, like a reported 49.26% rally very recently. It closed around $2.26 the other day after opening near $2.18. That's a strong climb, especially considering it was down near 50 cents sometime in the past year.
49% rally. That's quite a jump.
It is. It's a signal, really, that the stock broke out of its previous range and is attracting a lot of buying interest, pushing it way up from those lows. Momentum like that often pulls in more traders, trying to ride the wave.
Makes sense. And what about volatility and just general interest? You'd expect maybe some wild swings in this sector.
Well, interestingly, the beta is 0.63, which actually means it's been less volatile than the overall market.
Oh, really? Lower volatility.
Yeah, a beta under 1 suggests that. So if the market moves 10%, GameSquare, historically anyway, has tended to move about 6.3% in the same direction. It's kind of notable for a growth stock like this, maybe suggests a bit more stability than some peers, despite how speculative it feels. However, the recent trading volume is sky high, around 89 million shares changing hands. That clearly shows strong investor interest and good liquidity right now. And looking at key price levels, $1.50 was flagged as strong recent support, which, maybe not coincidentally, is the price of that recent public offering. Upside targets, well, they range from that $3.67 analyst consensus up towards those $10 plus forecasts for 2025. We don't have specific RSI or MESID numbers from the sources, but the sharp price move and that huge volume definitely suggests bullish technical momentum, at least in the near term.
Right. Things don't happen in isolation. What's been going on with the company? Any recent news, events? What's driving this? And what should investors be watching?
Okay, so this is where the story gets really compelling, I think. GameSquare just completed a big public offering, raised $70 million, selling shares at $1.50 each. But here's the kicker. That money wasn't just for, general business stuff. It was specifically raised to fund a large Ethereum treasury strategy, ETH.
An Ethereum treasury strategy.
Right.
So they're using shareholder money to buy crypto.
Essentially, yes, a significant amount. It positions them to be one of the largest public company holders of ETH. That's a very significant and, pretty daring strategic move. And this whole crypto initiative, where they're aiming for above-market yields on their ETH holdings, seems to be creating a lot of positive buzz and speculation. It's likely fueling that stock rally we were just talking about.
So I'm hearing you right. GameSquare is basically turning a big chunk of its balance sheet into a giant bet on Ethereum. That feels like a massive pivot for a gaming company. What are the risks tied just to that move specifically, beyond just crypto being volatile? And are there other things coming up, like partnerships?
You nailed it. It's a huge pivot, and it absolutely introduces unique risks tied directly to ETH's performance and, importantly, the whole regulatory scene around digital assets. Risks distinct from their core gaming business. It's a bold diversification, no doubt. As for other catalysts, yes, they have a partnership to produce the 2025 100 Thieves Summer Block Party with Lexus. That's expected to boost revenue in Q3 2025. That event, plus their upcoming earnings report, that's August 13th, 2025, those will be crucial for getting clarity on profitability or lack thereof and how the business is actually progressing. Other things to watch. Definitely the execution of that crypto strategy with their partner, Dialectic, their status as a major public ETH holder, just the overall crypto market performance, obviously. Any regulatory shifts around crypto, too, and of course, the general health and growth of the gaming and esports sectors. The analysts' strong buy ratings and those high price targets, they clearly reflect optimism about these catalysts paying off.
Yeah, lots of potential catalysts. But every opportunity, especially one making bold moves like this, comes with risks. Let's talk about the other side of the coin. What are the key risks we need to be really aware of here?
Absolutely essential to balance the potential with the risks. So stock-specific risks. Number one is still its current unprofitability and those high operating losses. They're burning cash. They need a clear path to making money. Then there's that significant dependency on crypto markets now, thanks to the ETH treasury. Very volatile. And, like you touched on, that recent share offering, that brings dilution risk. Existing shareholders own a smaller slice of the pie now. Sector-wise, gaming and esports, super competitive. Consumer tastes change fast, you have to stay relevant. And then macroeconomic risks. Potential crypto regulations are a big one. That landscape could shift quickly. And just broader economic downturns, right? People cut back on entertainment, tech spending. And while the recent volume suggests good liquidity and the beta is under one, those recent price spikes, they absolutely highlight the risk of sharp, sudden downward moves too. It's not a smooth ride.
Okay, so bringing all these pieces together, the fundamentals, the valuation, technicals, news, risks, what's the overall picture for GameSquare Holdings? Is now a good time to buy, or is it maybe more of a wait and see?
Well, The sources we looked at give it an overall rating of 5.5 out of 10, which basically tells you this is seen as a high-risk, high-upside speculative investment.
5.5 out of 10. Okay, kind of right down the middle, leaning slightly positive, but emphasizing risk.
Exactly. Let's break down that score a bit. Fundamentals got a 3. Yeah, there's revenue growth, but those losses are significant. Valuation scored a 4, looks cheap on sales, but super risky due to no profits, even with those huge upside forecasts. Technical scored higher, a 7, reflecting that strong recent momentum and volume. News and sentiment also got a 7, lots of positive buzz, those bold strategic moves. Catalysts got a 7 to upcoming earnings, events that could spark more gains, but crucially, risk scored a 5, highlighting, execution risk, market risk, that crypto dependence, dilution. It's all very real. Now, for someone thinking about getting in, the sources suggest the best entry range seems to be around $1.50 to maybe $2. That's near or just above that recent offering price. Could offer a decent risk-reward setup, potentially.
Right, near the offering price. And what about different kinds of investors? Does this make sense for, say, a short-term trader versus someone looking long-term?
Good question. For short-term traders, yeah, they could potentially play the momentum, the news flow, the upcoming earnings, but, and this is critical, they absolutely need tight stop losses. Given the volatility, maybe something like 10–15% below their entry point, so if you get in near $1.50, maybe a stop around $1.30. For taking profits, maybe look at taking some off the table near that analyst target, $3.54, and perhaps use trailing stops to try and capture more if it heads towards those wild $10 plus forecasts. For long-term investors, it's a different calculation. They might consider it as a purely speculative growth play, a bet on the convergence of gaming and crypto trends, but they really need to be prepared for potentially big drawdowns along the way and probably wait for much clearer evidence that the company is actually becoming profitable and successfully executing this very unique strategy.
So bottom line, GameSquare Holdings is framed very much as a high-risk, high-upside speculative play. It sounds like it's really only for investors who are comfortable with significant volatility, prepared for potential losses, but want that exposure to gaming, esports, and this pioneering crypto treasury idea.
Exactly. And it leaves us with this really interesting question, doesn't it, as we wrap up. Can a company successfully blaze a trail by mixing traditional digital media with such a huge volatile crypto position? Or does that ultimately just dilute their core business focus and actually compound the risks? It makes you wonder, are we looking at an entertainment company that happens to hold a lot of crypto, or is this maybe morphing into a crypto play dressed up as an entertainment brand? That's a fascinating challenge for any investor trying to evaluate it.